Hello everyone, myself Vaibhav. In today's session, we are seeing that the equity indices for major economies are trading lower, particularly after the start of European trading hours. And now, as we are getting ready for the start of North American trading session, the US equity indices futures are also trading lower by more than 1 percentage point. And of course, not to forget the losses of around 3 percentage points, which we are seeing in the major equity indices in the euro area. But this risk of undertone is not really helping the gold. And as the things stand, gold is also on the weaker footing. And I feel that in coming session, we might see the decline in gold, which might even take it to the prior swing low, which is there around 1850 USD per ounce. On the data front, earlier in the day, we had plenty of releases coming in from the major economies, including the employment data from the Australia. Then we got the inflation numbers for China, and then moving on to the European trading session. For European trading session, we didn't really get any major release which might have moved the market. And for the US trading session, just a while back, we got the US initial jobless claims, which have come at 898,000, and these are actually higher than the prior week's number, and the reading is even above the expectation. So I think the driving factors might be the weakness which is persistent in the US economy, and of course the again rising cases in the United States is also having an impact on the labor market and people's willingness to work, and that might be the contributing factor behind rising initial jobless claims. We are also scheduled to get the EIA's crude oil inventory data, and here we are expecting the drawdown of more than 3 million barrels, and after the 0.5 million increase which we saw in the prior week, I think this drawdown is likely to support the crude oil prices upward momentum, and we might see if the data comes as per the estimate, we might see even little bump in the crude oil prices. So let's see how things pan out. And we are also scheduled to get the natural gas inventory data, but we will not really go into the details of that. Now let's shift our attention to the technical aspects. First, we will consider the gold, and then we will move on to the GBP USD, which is showing wild swings depending on how the Brexit negotiations are unfolding. Let's start with the gold's technical outlook first. This is the daily time frame chart for the gold, and after due consolidation in the price band around 1900 USD per ounce, the gold, it seems like, is likely to resume its downward trajectory, and in that scenario the natural target works out closer to this immediate swing low, which was established pretty close to the USD 1850 per ounce level. And considering its current price levels, the fall of around 2 to 2.5 percentage point, it doesn't really seem like a big deal for the gold, and the gold has been pretty volatile. And as you can see from the ATR, it is almost around 1.5 percentage point. So in next couple of sessions, I am banking on the possibility of gold moving lower toward this prior swing low, and to that extent we can indeed profit from it, of course, if things turn out as per our anticipation. And we will have to figure out what are the important levels to watch out for in case we are going to play the bearish trade in the gold. And the immediate swing high established around USD 1910 is the level to watch out for. I think unless and until we have any significant break above this prior swing high, and we also have these central pivot point of this month's pivot point series. So both of these factors are pointing to the weakness in the gold, and because of that we might see after due consolidation. Even in today's session, the price zone around USD 1900 is going to be an excellent choice to look for fresh short sell trades while keeping the stop loss just little above this immediate swing high. And if you consider the regression curve after this extended consolidation has indeed moved, pointing to the upward trajectory. But given the fact that after this long consolidation, the gold failed to hold above this central pivot point, and because of that, even this immediate swing high, we saw swift selling pressure pushing the gold lower. So, because of these factors, I think we can expect the gold to break on the lower side and get closer to this immediate swing low. And if that is going to be the case, to minimize our losses and maximize our profits, we should be getting involved in the gold anywhere in the vicinity of this confluence zone of 50 and 200 SMA. We have the 200 SMA around USD 1904 per ounce, and the 50 SMA is just closer to the 1900 area. So taken together, these both the SMAs are likely to prove the as immediate hurdle, and we can indeed look for fresh opportunities to go short anywhere closer to this resistance zone while keeping the stop loss, as I said while explaining the 4 hourly chart, also just little above the prior swing high. So for a entry anywhere close to this price band of USD 1900 to USD 1905, we can pretty much keep the stop loss little above USD 1915 while targeting on the lower side the price zone closer to the immediate swing low on the 4 hourly chart. So that we get the risk reward ratio which is optimum, at least at 1 is to 2 or even better than that. So bare minimum we can go on to target the price zone around USD 1870, and if things hold well we might even expect the gold to move towards USD 1850 per ounce levels. Now let's shift back to the currency segment. Here we will see the GBP USD's technical outlook. The GBP has been consolidating closer to the critical level of 1.3 for last couple of sessions, but it hasn't really been smooth sailing for the GBP USD. It has moved wildly, and these swings have been more than 100 pips, and the ATR for the GBP has been at the elevated level for a while now. Even currently, the GBP's ATR is almost 120 pips. So for GBP these days, 100 pips is not a big move. But what stands out that these are important levels for the GBP USD. I think this can make or break the GBP's trajectory on the either side, and we are likely to see the immediate, not immediate, but very imminent break on the either side. So you can even consider looking at the daily time frame chart that the GBP USD is at the crossroads. And if we want to figure out the possibility of GBP moving higher or lower, and on which side the possibility is greater, I think we will have to rely on the shorter term time frames like 4 hourly and also hourly. And if we consider the pivot point series, then as you can see, the GBP has been struggling close to this central pivot point, which has been acting as a strong resistance zone on the upper side, and the GBP has not really been able to hold itself above this level. And as you can see in the early hours of today's trading session, we saw this consolidation happening closer to the resistance zone, and then after the start of the European trading session we saw this swift decline which has pretty much brought the GBP USD closer to the yesterday's lows. And in such scenario, I think it's prudent to look for the short sell trade anywhere in the vicinity of this immediate hurdle on the higher side. And if you consider the regression curve, it is steeply bent on the upside. But after this rejection closer to this strong resistance zone, I think the chances, or you can say the probability, is fading, and we might see the resumption of the downward spiral in the GBP USD, which might push the GBP USD to break below these immediate swing lows. And if we are going to go for the fresh short sell trade, I think we will have to use this confluence zone of 50, 100, and 200 SMA. So here we are looking at this possible crossover of 50 below 200, and it will be a death crossover, and that will add confirmation to our bearish bias. And if we are going to go for the trade here, I think we should target the price band between these 200 and 100 SMA. 100 SMA is around 1.300, and the 200 SMA is around 1.297. So we have almost 30 pips gap between these two SMA critically important SMAs. And if we are going to go for the fresh trade after due consolidation, we can pretty much utilize this immediate swing high, which is there around 1.306, to be kept as the near term stop loss. So for the entry anywhere in the price band of 1.198 to 1.30, we can utilize this stop loss, which is there closer to 1.1306. So for a risk of around 60-70 pips, of course, it might seem like a big risk, but of course you will have to go for the bigger stop loss, as the GBP USD is fairly volatile. And to reduce the risk, all we can do is reduce our lot sizing, and then go for the position sizing, which is optimum from your perspective, so that you don't lose too much money even in the scenario of you being wrong. And for a risk of around 60-70 pips, we can pretty much expect the levels close to 1.285 at the minimum, or even below that. We can pretty much target the 1.280 levels, and in such a scenario, we will be getting the risk reward ratio, which is going to be even better than 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.